Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, weekly stock market analysis show, where we look at what happened in the market during the week and try to learn something from it and plan for a better trading week for the next trading days. So, this is analysis for May 2nd, Tuesday, tomorrow, 2023, the week that begins with that, right? So let's get into the charts first. Look at this, the weekly charts of the Nifty and the Banknifty. What you see, wide range bullish candlestick pattern seen on both indices, Nifty and the Banknifty. Absolutely wide range bullish. Look at this width, look at the length, look at the height of the candles, such bullishness. And remember that the Nifty we had a bearish engulfing the previous week, which has got completely negated. Banknifty also had a bear trap which got completely negated, and the bears are kind of trapped when market broke out. Literally broke out is what happened last week on the weekly charts. Look at the daily charts. The Friday closing was also wide range bullish on both time frames, on both indices. Right? It's a breakout from a trend line channel as well. You can see that. Yeah. Right. And this is what has happened. So it is comfortably above the previous trend line or the breakout zone from where we made the all-time high. So it's comfortably above that, established itself with a green white bullish candle. Same with the Banknifty also. So cup and handle broke out comfortably 3 weeks above the breakout zone. Right? All the moving averages down there, absolutely. Look at the Bollinger Bands. The volatility bands are expanding on the upside, clear bullishness ahead on daily time frames on both indices, right? Absolutely on an expanding Bollinger Band, indicating price above the median and almost getting into working of the bands once again after having a beautiful retracement in between on both indices, right? So let's just try to summarize it in words. That it's 2,400 and I'm sorry, it's a mistake. 243. I was thinking Banknifty, so that's a mistake. 243 points up. It's 2.5% up on a weekly basis on the Nifty. Wide range bullish candle on the weekly candles. And the extra rally is extended to 7.3 from near to 6%. So on the Nifty, and it has negated the bearish candle pattern and it's broken out of the trend line channel and the previous breakout zone. Banknifty also 2.65% up, 1,116 points up from the previous wide range bullish candle from the previous week, and it's a wide range bullish candle. And previous week was a bearish pattern of bull trap was there, and it's got negated, and it's absolutely 12%. Almost all things is recovered now. It is negated the bearish pattern as I said earlier, and it is broken out of the trend line channel and is above the previous breakout zone. So Nifty on a weekly basis on the Friday candle is 0.84%, 150 points up, and it's a wide range bullish candle closing above the 18,000 and the 80,050. It's an inverted hammer candle pattern that you can see there. This is an inverted hammer, inverted head and shoulder basically. Sorry. So this is the head part, and so it's a broken breakout that is happening. And that's it on the daily time frames. And the Banknifty has also gained more than 0.5%, 233 points on Friday, and sub bullish hammer the candlestick pattern as you can see, and it's about the 43,000 and 43,200 as well. So that's about it. So the markets have claimed back almost all the correction levels. It has conquered the correction levels more or less in 5 to 6 weeks of a rally on the upside, which happened much took more time for the retrace that much, but this 5-6 weeks is short time to have such a beautiful rally to have happened from the previous low. And the bank interest is very strong. It went as far as 850 points, just 850 points away from the all-time high levels, right? So short-term bearish patterns are all negated. Index are broken out from the, but it has got into a previous resistance zone. That's something critical. So 18,000 to 18,300 is a resistance zone, which is very crucial for the Nifty especially. So some small pullbacks could be expected next week before we would be breaking out all-time highs. What The charts are telling. Now Bollinger Bands is facing, it's a bullish bias, price greater than median, and it's saying that price will further move up because it's expanding on the upside, no contraction at all. But the further it moves away from the median of the Bollinger Bands, there is more likelihood that it will attract back towards that. But it's not on a daily time frames. Right? So yeah, so that's something you have to keep in mind. That's a summary of what the price actions are about. Now let's look at the price support and resistance levels. You can see that inverted head and shoulder breaking out point. So 1865 is where it is close to like. So 1870 has got a previous high resistance. After that 18142, 18202, 18262, 18385, 18442, 18541, 18678 like that. Those resistance on the upside. Downside you have 17972, it could be a support, previous low, and then 17863, and then you have a rounding numbers in between that comes 17800, 7700 likewise. 17650 has got support, 17669 has got previous low support. Beautiful. That's what the breakout zones are there. So beautiful supports down there and resistances are there. It's a bunch of resistances till the 18262 is what price action wise. Also another swing high would be broken to 18265. So that's something. This is Banknifty support resistance levels. It's very close to the all-time high of 44,400. Right, look at this. And the first resistance could be coming out at 43,400 and 43,600, then 43,850, and then 44,000 rounding number, then 44,151, 44,400 likewise. Downside 43,179 to be precise. So that's a good support. And then down 42,800, 42,600, 43,300, 42,230, 42,000 is a major support zone. Then you have 41,600, 41,100. That's all supports on the downside. So, right. So the previous swing highs and rounding numbers basically that we're talking about. So Banknifty, remember we have a trend line breakout that has happened there also. Here also we have a trend line breakout that is confirmed, and we have an inverted head and shoulder pattern which could work out. But normally they are more powerful on a weekly charts, but this image will turn out to be seen on weekly charts also probably, right? So that's our bullishness there. Levels, make a note of these levels and correlate that with what the open interest is getting shown on the open interest charts and graphs, and then you have to find the levels for you to enter or exit. Moving ahead, momentum and the trend indicator. So the weekly is what you see in the Nifty and the Banknifty on the left side, right? It is still not bullish, but it's rising up in sideways momentum. Almost there in the bullish zone. So it's in the bullish in the Banknifty, but not bullish in the Nifty. That's how it is. And the daily time frames both are bullish and rising. Bullish and rising. The momentum RSI we're talking about. Right. And how about the ADX? ADX is bullish overall on the weekly and the daily charts, and on both the indices Nifty and the Banknifty. The trend indicator ADX is in the bullish zones. But the weekly bullish zones, the strength of the trend is weak. It's because it takes some time. It just crossed over and it takes some time to further move. But at the moment, as you can see, it's bullish only in the weekly time frame on the Banknifty, but it's yet to move into the bullish in the case of Nifty. But otherwise, overall bullishness in the momentum is seen and rising up. Right? That's about momentum in the trend. Moving at volatility. VIX has fallen, so there is some interesting aspects here. 6% down, and it is 10.95, one of the lowest VIX levels that we have seen. Right? It's a low volatility regime that we are going through, and one thing you have to keep in mind is whenever historically when it has gone below to 10.5 kind of levels, it has spiked up heavily. Right? So you have to be cautious about this. Now, we never know how long this volatility would remain in the low, but historically 2019 December I think, and 2017 June or April, that time frame, it has spiked up substantially after having stayed at a very low regime for some point of time. So the spike up could be big. So you have to be cautious when all the VIX is very low. This is extreme low levels of VIX that is there. Right? Good when it's very low premiums. For option sellers will not be great, but if your index in chopless will be less, more or less, but the premiums are less, and then there is not further decay that happen to happen. It's very difficult to make meaningful profits out of it. But yeah, lowest regime for we have got into now. It's a peculiar scenario, which can be traced back to 2019 and 2017 scenarios in the past 1 decade, 10 years. Right? Look at those volatile fixed levels and see how it has behaved. Now, for the open interest, moving on to that, May 4th is the next expiry, the first weekly expiry of the May of 2023, and for that the put call ratio is bullish. 1.26 and 1.23 in the Nifty and Banknifty. Clear bullishness there. And open interest of the futures is also bullish. Its short covering is very powerful. People who have been short is now covering and turning into bulls. So that can be very powerful up move. It can further happen is what the open interest is showing. Look at the levels of the open interest, what they are showing. It's beautiful supports around here on the Nifty charts and Banknifty also. Great supports, clear bullishness is there seen in the open interest charts. You can see the the build-up has happened and unwinding of the calls has happened. Beautiful build-up on the Banknifty also. So look at this level. 18,000 is where the highest put rating is. 18,000 is the same place with the highest call rating is also seen. Right. Second level of support is 17,800 and 18,200 on the upside. Right. 43,000 is the place where the maximum put and call rating both are seen, and 41,000 and 43,000 is where the next level of highest put and call rating is seen. So 18,000 is going to be very crucial as per the charts that is seen as of now for the next expiry. Holding on that 18,000 and Banknifty holding on that 43,000 is the crucial thing, right? So that's what the option. So otherwise, open interest is clearly showing bullishness. Moving ahead, let's try to understand what the industrial sectors have done last week. Now we can look forward how they may be performing this week. Now, across this sector, bullishness is what you see. The IT sector 3.4%, metal 2.5%, 2.25% up, auto sector 2.2% up, pharma is 0.5% up, FMCG is 2.4% up, realty is 5% up. Across the sector, moves have happened, but which is the most bullish? FMCG, because it's bullish on both time frames, of higher time frames and low time frames, weekly and daily, both. So you can take bets on that. But others, look at the recovery that has happened in the IT, 3.4%, and now it is sideways momentum on both time frame. Right, metal is already bullish on the shorter time frame. Auto is already bullish on shorter time frames. FMCG and pharma both are bullish on those. Only in the higher time frames it has to get into bullishness. Right, so all sectors are in bullish zones on this short term, except the IT, which is recovered from the bearishness. Excellent performance across the sector. Across the sector move is what has happened. Right, but most bullish is FMCG, of course. Let's keep that in mind. Chart related to sorry here. This is the recovery, the big move that has happened. The momentum is climbing back in the sideways. Metal is climbing up, and momentum is rising. Not at bullish in the auto. And pharma is also heading up, in the sideways. FMCG has broken out from that pattern of consolidation and then rising up in the bullish zones on both time frames, while reality also has picked up and then is breaking out of that trend line channel. Is what you see in different industrial segments. Now moving on to how the industry heavy stocks, which has contributed most to the index, and I tried to analyze. HDFC Bank, big comeback. Remember, it had reversed inches above the all-time high levels. Remember, it has been staying there, trying to break out from the pole and flag and pole pattern, failed, and it has come back, retrieved, and then once again attempted to move off. Is what you can see. It's a range shift in the momentum, and trend and momentum both are in the bullish zones, and absolutely fantastic. HDFC twin HDFC. The bank is what we're talking about. HDFC also is showing some indecisiveness. Yeah, in the weekly charts, there is indecisiveness in HDFC. After that big pullback that has happened closer to the all-time highs. Here also you can see that small. Here the wick size, it's a dragonfly kind of pattern. There is indecisiveness there, but look at the wick size, shows the support from the downside, from kind of bulls present there. So the momentum trend shift can be seen in the HDFC also. Its momentum has climbed and settled and then bounced up from the RSI 60 levels. Is beautiful bull, which indicates that it's more likely to move up. But there is indecisiveness there that you indicate. So HDFC clearly in the bullish zones. Reliance Industries is not in the bullish zones, right? But it is on a green candle, and so it seems like that move will continue. as per the momentum that's trying to. And the trend also has caused on the bulls also maybe weekly time frames. Look at this Infosys, two stocks which had fallen down. First was beaten down. Now it is also showing some green. Long way to go. This is already recovered from the hit and it's in the sideways. Now the beautiful thing is that weekly time frame still remains in the case of Infi, weekly time frames is still bearish. So let me just confirm that I have a doubt on that. As far as what I remember from the screenshots that's taken, the weekly time frames. Yeah, so that's true. Yeah, yeah. So Infosys continues to be medium-term trouble is there. That's only index heavyweight that's having some trouble, right? Still, medium time frame is still bearish. So otherwise, TCS was picked up beautifully in the sideways after having bounced from the support of the RSI 40. IGC Bank also is moving up and still not being bullish. There is some resistance that it faces at the RSI 60 levels. While Kodak Bank has beautifully climbed up and rising up from the previous low, Morgan is also the bullish zones, right? So the troublemaker is only Infosys, which also has shown a green weekly candle after the 10% circuit breaker lows that happened 2 weeks back, right? Following the results. So everything is fine from the bank's perspective, right? Land sideways and Infi bearish, TCS also sideways. So banks are doing fine. The three heavyweight banks, ICICI Bank, Kodak Bank, HDFC, and HDFC Bank, all are fine. Lines and TCS sideways, while some bearishness remain in the Infosys, but all are showing green last week. Right? So that's all industry heavyweights in the different sectors performed last week, and how we can look for what could happen in those sectors. Now, here is the beauty: Fyers were turned to be net buyers. 5,400 crores of buying in the cash has happened by the Fyers, and DI is also buys it 1,875 crores of buying. So net longs derivative also the Fyers. So hold up. So buying for the institutions, support from the institutions are great for the market. That's only where the market will move. It is nearly 3,000 crores of buying has happened with the FIs. That's that's so the market is right. Moving ahead, looking at the global markets, currencies, commodities, and all that. Let's analyze. In the currencies, dollar index has actually stayed flat and was mildly down 104.67. Remember, it's a cup and handle pattern. The price is moving down the channel. See a lot of support zone. It seems like it's a support zone that's been consolidating and moving flat for the last 3 weeks. It's still having a bearish momentum, so all is good. USD INR is still close down less than half a percent, 0.38% down, which is good. Just fallen below the 82, but still not enough. Still not too far from the all-time high low levels of the rupee. Rupee is not up, has appreciated a little bit, but not enough, and remains weak. And it's in a descending wedge. But if you will break this ascending wedge, not a descending, it's ascending wedge. If we break down this, then we could see a support near the 80 zones. So once it reaches below the 80, that is where hopes will come back on, and you will be appreciating and all that. Right? But as of now, some downward has happened, which is good, positive, but still weak rupee. Crude oil has fallen back, which is very good. This is a relief. 76.6 once again, 1.7, so nearly 2% downfall has happened. Remember, we went as far as very close to the above the median of 84 in the downline in the trend line channel. Right, so it's falling down and falling back to the trend line, which is good. Momentum is sideways, so far so good from the crude oil. Now the breakout is failing and feeling the resistance, but momentum is still bullish on the gold with the weekly charts. Right, we have some red. Actually, it moves slightly up. 0.3. It is flattish move. 0.30% of the gold is flat. But remember, it is a major resistance zone. It's the third time it is trying to attempt to break out after the COVID. Right. So it's very close, still very close. It's still bullish. Momentum is bullish. There is divergence in the momentum also. So every chance that it can hit the all-time high, as long as it's not ready to go down to the trend line channel bottom. Right. So it's holding on there, consolidating, trying to make another attempt when the time comes. That's what gold is doing, the hedging instrument. So that's about crude, gold, and currencies. Okay? So all is good as long as the dollar is, as long as the rupee is strengthening and the crude is falling, and you have the gold hedging in terms it's not falling down too much. Look at the global markets. Use indices what you see here: Dow Jones, S&P 500, and Nasdaq on it here. All of them are seeing green. It's a hammer. It's almost breaking out, right? But momentum is still below the RSI 60, and momentum has climbed to the RSI 60, almost there in the case of Nasdaq. That is given 2% move. This is nearly 1% move. S&P 500 also 1% move. So broader index and the main index Dow both have shown, more than 1%, and Nasdaq is given a 2% return. This is very good. So, but still the momentum is on the edges. It's at this crucial support still, crucial resistance. I'm sorry. So it is suddenly break out, which is positive, but every chance is there that can reverse back to the descending wedge. Right. To stop for the next week's Aditya Birla Capital. Look at this cup and handle or rounding pattern breakout. Beautiful breakout from that candle, from the trend line channel, and it is good to risk reward towards the next 213 kind of levels of resistance that you can see. Good risk reward. Volumes are decent. Momentum is in the bullish zones. Trend is in the bullish zones. Second one is Hindustan Aeronautics weekly charts that you see here. So beautiful breakout from the consolidation. Beautiful volumes. Momentum is bullish zones, and trend is also bullish zones. It could go up to the top of the ascending wedge, and good risk reward should come in there, right? So the next one is a Nifty option strategy. This is a payoff of that you see here. Basically, it's a double calendar spread for the weekly. Actually, this should have been taken a few days before. Actually, Friday is ideal place where we have to take this. But Monday is holiday, so yeah, still it could work. Look at the range: 17, 865 and 18 to 40. There is less likelihood this gets broken. Even if it breaks, you can either roll it up or roll it down on either sides, whichever side is falling, or you can square off this selling point where the premiums are rising and then extend it also. So you can do the adjustments likewise. But basically, what we are doing is near week put and call. We are selling like a triangle, and then hedging positions for the 4 week. Hedge positions on the both sides, B and C, for the 4 week is what we are doing. Probability of profit is often good, and then range is also very good. Since there is a holiday, we are taking it after that. DGS happened for the premiums are also less, is why we are getting such a small range on the call side, but still reasonably okay. The portion size according to capital, only 50,000 cost for a 1% to be taken. 4 lakhs 50,000. Right? Reasonable risk reward. Risk reward does not may not look reasonable from here, but you just have to come out on a Wednesday, one day prior to the expiry, and we just have to target for 1 to 2% only. But you can make sure that you get that 1 to 2% consistently every week. That's the beauty of this strategy. It's completely hedged, and you know what the risk is involved there. Right? You're not going to lose more than what you know. Right? So overnight risk are completely hedged, and you get you have a range as a price movement of its on both sides. You don't predict the direction of the markets here. Right? Prediction of direction of the market is very difficult unless it is intraday. Right? When you have high positions of the week, it's difficult. You know that the range can be predicted, but never exact levels where it will go and stop, or it will reach, or it will revert, and all that. It's very difficult to predict. So always go for known directions as long as you have a little more capital. But hedge positions capital also is less. So that's strategy for the next week weekly on Nifty. Now that we have learned a lot of things about the market, and we also have some long calls and long option strategies and all that, let's wrap up. Basically, what has happened last week is extension of the rally is what has happened, in spite of the fact that bearish candlestick patterns of sorts there on the weekly basis. It got completely negated, and market broke out of the trend line channel above the previous breakouts on or previous all-time highs are made from there. So it is comfortably closed above that, and it is comfortably above the moving average also. All the expansion moving average that we talk about, 20, 50, 100, 200, all of those, and then it is closed with a very wide range bullish candles on weekly basis on both time frames. Right? What else you need? Now coming to the indicators, the momentum indicator, the trend indicator, ADX, Bollinger Bands, volatility indicator, India weeks, open interest, put call ratios, price patterns, all of them on the short terms are in the favor of the bulls. Absolutely. The US has an attempt to break out, showing some green of 1% more on that side. Fyers are down to buyers of 3,000 crores buying on the Friday after a long time. Such big buying has never come in from Fyers since long. The weeks is in the very low levels, right? And that indicates the fear and greed is less, right? So overall, the market view for the next week is mild bullish. Now, the medium-term momentum, remember that it is for the Nifty, it is yet to climb back and settle above the RSI 60. So right. So you have to keep that in mind. And there's Nifty is entering the major resistance zone between 80,000 and 300. Right. So global inflation, Fed hikes, market economic data that is coming in, COVID war, and all these things are still there. So even though the big uncertainty level has come down, cooled off after having get used to that, but anytime this could create chaos, and especially the fact that it is at a very low level, extreme low level of below 11, at the 10 point kind of levels, you have to be cautious of any promotion that can happen at a time. So keep that in mind. Now, crude has come off, but the rupee is still not strengthened that much, still above the 81, 82 kind of nearby level. So these are all the things that you have to consider from the bear point of view, and then you have to be cautious about those things. Now, look at the levels for the next week. The levels will be 17,800 to 18,300 on the Nifty, and 42,500 and 43,600 on the Banknifty. On the medium term, the levels will be 16,615 downside, 36,800 downside on Banknifty, and the upside 18,300 and 43,000. Above 43,000 and above 18,300, it's going to be, if that, as long as that is held, it's going to be bullish. So the rally has already started since it has closed above the 43 of 200 levels. Well, it's already started in the Bank Nifty, but Nifty has to catch up a little bit more, right? So that's my view, my bullish view, and probably the opportunity for investing in long-term quality stocks may have finished by now if the market continues to rally, but every time it dips, that's a time for it to do a SIP model of investing or make use of covered calls and rental income strategies that is there in the playlist. Check out that. But make sure that you have hedge positions and always protect and position size properly. Whenever the VIX is spiking above 120, stay out of it, and then otherwise, if you're not clear on the direction, then go for the direction or vertical spreads at least, so that your market, your capital is intact and you can still be in the game. Right? So play safe, and yeah, wish you good luck on the mile, bullish way for the next week if you agree with my market view. So I hope you have got some clarity, better clarity on analyzing by going to video. If it has helped you in some way, consider hitting the like button. Then comment if you're watching this and if you're not subscribed, please subscribe. So right away, and then share to friends and colleagues. We have few subscriptions, very few subscriptions, and appreciate your help this out. Thanks for watching. Happy trading, happy learning, happy investing. And if you want to avail the Telegram services, check out the description and click on the link. Thanks for watching. Bye bye.